Are they on?
Hello?
They're not on.
Good evening. We'll call tonight's meeting to order. Do we have any board members on Zoom? Okay, please let us know when they come on.
Please stand for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Just to let you know, the board met in an executive session immediately prior to this meeting to receive the required annual safety and security report and to hold an informational session as a follow-up. Actually, we did not do that part yet. We may do an informational session as a follow-up to the board retreat after the second meeting tonight. Moving on to student and staff recognition.
Yep, we did have a student reached out who was not able to be honored at our last meeting, but we reached out, we have not heard back, so they are not here tonight. But I did want to just take the opportunity, and while they're not here, and maybe they're listening, but we will certainly be following up. But come the end of June, Dr. Kathy Swantner will be retiring, the principal from Morristown Elementary, and we just want to thank Dr. Swantner for all her service to the district, to the community, her passion, her dedication for Morristown is we're going to miss, and we just wish her the best in the next chapter. And we're just thankful for all that she has done over the years. So we just want to be able to honor and recognize her, as well as some additional changes. Dr. Tom Kramer will be leaving us to be an assistant superintendent at the Susquehanna School District. And then unexpectedly, we learned that Dr. Stacy Kane will also be leaving us to become a director of curriculum and professional development. So we have retirements, but also we have individuals who are growing and expanding, which is wonderful for them, sad for us, so we'll be updating everyone. But we do want to thank all of them for their service and commitment. They've been absolutely wonderful to work with, and we will miss them. So.
Thank you. We are now at item 3, approval of the agenda. Is there any need to amend the agenda with any additions or deletions?
Mrs. Brady, one from the administration side, 10F. That is the same as 10E, the budget transfers. So inadvertently, that was not removed. It should have been removed. So we can just eliminate that tonight, and we don't need to vote on that because the exact fund balance transfers of $13,062,270.44. If you click on the budget transfer document, you'll see that exact number. And so 10E is what we need from approval.
Okay. Any other additions or deletions?
Mr. Wagner has joined the meeting.
Okay, thank you. So then that gives us 7 altogether. All right then, can I have a motion to approve the agenda with that one change?
So moved.
Thank you, Director Linton.
Second.
Thank you, Mr. Best. Any discussion? All those in favor say aye.
Aye.
In favor.
I believe that's 7-0. I need a motion to approve the minutes as presented from the regular board meeting on June 9th and the Education Program Policy Personnel and Legal Committee meeting also on June 9th.
Motion.
Thank you, Mr. Best. Is there a second?
Second.
Thank you, Director Linton. Any discussion? All those in favor say aye.
Aye.
In favor.
That motion carries 7-0. And moving down to number 4 on our agenda, I don't believe we have any resident requests tonight to address the board, so we will move on to the superintendent's report.
Thank you, and again, good evening. Tonight, the updates will be focused around our high school project. So we're going to begin doing it a little differently tonight from an approval standpoint, just to keep things moving with the PAC project. So during this meeting, you'll be hearing from Scott Sullivan with KCBA regarding the PAC project, package 1A, involving the mechanical, the equipment, electrical, and plumbing work for that project. Just to give you an update, we had the bid opening. He'll be going through all of that. Then at the Building and Grounds meeting, we're going to have you on the agenda for consideration to award the bids to the lowest bidder. And then at the Finance meeting, this way we're kind of separating it and giving you multiple times to either discuss, ask questions. We'll be actually approving the contracts at that. So we're doing it in that order just to give you time to be able to think, ask questions if need be. The PAC project has begun, but the package 1A, again, all the MEP work. So Scott, if you want to come up to be able to talk about the project and be able to just give that overview so that everyone's aware, to kind of talk through the bid and then some of the next steps with what will be involved in that particular piece, and if there's any board members' questions.
Thank you. Scott Sullivan. I'm with KCBA Architects, the project manager. As Superintendent Burminsky mentioned, Package 1 is actually under construction. While you're not seeing any digging happening right now, that's because the contractor is procuring all the materials required. We expect that they will actually be on site to start trenching for that electrical secondary duct bank from the existing steam plant down towards Kaufman, across Kaufman, and then up towards the PAC. That work is scheduled to be complete. We think it's going to be in the first or second week of October, and that is on schedule. They are doing all they're doing as needed, as requested. They've been meeting all the requirements of the contract so far, so we're very excited about that. Package 1A is the other project that is going to make the PAC be a standalone building with new heating and cooling. And that's the bid that was just opened last week. We had 3 prime contractors: mechanical, electrical, and plumbing. The total value, I believe, is $1,007,000 and change. That's a little bit less than what the anticipated budget was, so we're very excited about that. And we, all 3 of those prime contractors have accepted have told us that their bids are solid, and they are ready to sign the agreement and get started. In fact, I've had one contractor saying, "When can I start?" which is a good sign. That means they're excited and need the work. So that's what's up for today. And then, should I talk about package 2 and 3, or?
Sure, before you jump into that, in terms of the package 1A, because we did package 1 and 1A to keep the PAC project going so that that can all be completed, and that we get the PAC back, hopefully by the December timeframe. We're pushing November, but.
Yeah, middle of November is the plan.
Right.
And that's when the school starts with their theater productions and their other musicals and things that are happening in the late fall.
Yep. So we sent out to you all of the individual companies that bid on the project. The lowest bidders were highlighted. So those are the ones that, as we get to Building and Grounds, where we'll do the awarding, and then in the finance meeting with the approval of the contracts, we actually have received the signed contracts back from the vendors. We have not signed them yet because you have not approved those yet, but does anyone have any questions with regards to package 1A for Scott?
Or the administration. I recognize Farfield because they're working at LP. Have we worked with all of these vendors before, the electrical, mechanical, and plumbing?
So Farfield is one of them.
Farfield has the largest contract, and that's the mechanical, and that's great because that's the one where we want a trusted partner, and Farfield has proven themselves to be a trusted partner. The other 2 is McCarty & Sons for electric, and then JBM Mechanical for plumbing. The plumbing is by far the smallest, and that is literally just running a gas line from Kaufman Road to a gas meter that's actually running the gas line from the gas meter into the building and up to the roof to feed the new heating units that are on the roof.
And so we have not had any issues or concerns with those contractors. In fact, at the construction meeting for the PAC project last week, Farfield has worked with McCarty on previous projects as well, so they have worked together before.
I would add, we have McCarty and JBM on multiple projects. We have no issues whatsoever.
Thank you.
Thanks, John. Any other questions for the package 1A project? Okay, so then moving into the high school project.
Sure. Package 2 is the main high school renovation and addition. That's the largest one on our scope. We just had the project is officially out for bid about 2 weeks ago. And then last week, we just had our pre-bid meeting. That's where you really get a sense for who's showing up and who might be bidding. And we had a packed house in this room. We had over 55 people that picked up the drawings. Not all of them are prime contractors, so it might be, give or take 40 prime contractors out of that. But I could tell you that there's a lot more of the GCs and the mechanical primes that are looking at this job. So that tells me we're going to have good competition on bid day. And so we're excited about that. And they're starting the process of asking their questions, confirming the scope, and we're addressing that. And obviously, we're going to have another walkthrough, because we had one last week. We're going to have a second walkthrough next week. And that's where they'd like to bring their subs in, who are the people that kind of, the subcontractors who are going to be looking at things like drywall and ceramic tile in the bathrooms and things of that nature. Package 3 is the final package, and that project is called South of Kaufman Projects, because all the projects are south of Kaufman Road. That includes a new band lot right next to where we have the current barn, and then that includes a new maintenance building that's behind the middle school, and then a new field house on the end zone of the football stadium, and then a renovation of the existing field house and the existing concession stand, and then new stadium vehicular park, new stadium lighting, excuse me. There's some ad alternates there because we want to make sure we control the bid environment and select what we want to choose at the end. So the Kaufman Road project is officially out for bid. Our pre-bid meeting with our walkthrough is next Tuesday. We're going to then get a good sense on seeing how many individuals are interested. It's a smaller dollar value. It will attract the more local contractors, which we all want. And then that one's actually going to be opened first as a bid opening. So that allows those smaller contractors to remain excited about it. Hopefully, maybe they'll win the bid, and that'll force the larger contractors on the high school to really sharpen their pencil even further.
The other piece we'd like to share, I did put this in board news, but just for the community awareness, we secured approval from the Planning Commission. I shared that at the last meeting we'd be doing that. We were then subsequently, individuals were at the Township Supervisors meeting, received approval for the project there. The DEP submission is going in either this evening or tomorrow morning. The deadline for that is the 25th, but I received information that all the third-party reports and information that needed to be submitted, ELA does have, and their senior engineers are in the final reviewing stages to make sure that gets submitted and completed on time, which is great. We were hoping it would be a little earlier, just from a window standpoint of 30 days being the response, but they're assuring us that they want to make sure that this was going to be a solid submission. So good news all around there. The other piece, we have some other individuals here. John, do you want to introduce Andrew so the board can?
Yeah, for those of you who haven't met, this is Andrew Shuey. He started on the PAC 1. He is going to be on site daily for Fidavia through all of these projects, for the high school as well as the south of Kaufman Road. At some point, we're going to have to give him some help once everything converts. LPC as well. Yeah, and he's also doing the work at LMS, or LPC will be on.
So Andrew's been on site, meeting everyone, walking around, kind of helping out different areas of LPC currently. And so as we continue through projects, getting updates and things, Scott will be the main contact from KCBA, Andrew, point of contact for Fidavia, and then all of us working and providing you with those updates. So we wanted you to be able to see the individuals that'll be here and that you'll be interacting with.
Great.
So.
Thank you for all you guys are doing.
The other piece that I just wanted to acknowledge that is on under item 11 for the authorization. As I shared with you, it was discovered that we need to replace the sprinkler heads at Landisville Middle School due to the timing of trying to get this completed, due to just finding this out. The authorization that is there, that you give me that authority, would allow us to properly procure and get that going and then retroactively bring it back to you on July 14th. However, if the bids come in quotes through the CoStars and whatnot programs, come in above the $125,000, we will have a special meeting because I'll have to bring that back to you. We tried to set the limit based on what Moore Engineering was recommending as to what they thought would be up to a reasonable price for those sprinkler heads. So that is what that is, just to be upfront with everyone with regards to why that is there for this meeting. You have the calendar of events. And we continue to work on planning for the upcoming year through interviewing, hiring, cleaning, a lot of facility work. When things maybe slow down in terms of the educational world, the operational world picks up very heavily at this time of year. So we're just continuing the day-to-day, and it's been nonstop since school has ended, and we'll keep going to make sure we're ready for the upcoming school year. So that is the superintendent's report. Any questions?
All right.
Aaron,
Yes,
Aaron
there-
Small has joined the meeting as well.
Okay, wonderful. So we have 8. And President's report, I just would like to report, I know we had been teasing the fact that we were going to be having a board retreat and planning on that. We did have that, and happy to say that was, I think we all felt it was a great success. We all came away feeling really good about the progress we made there, and are looking forward to continuing those conversations and progress in the months ahead. Also, we have completed our required annual evaluation of our administrators, and that statement is on the website as we speak, so you can read that statement there. Moving on to number 7, the representative and adjunct reports. Director Linton for IU 13.
Thank you, Mrs. Brady. Yes, the IU 13, I have nothing new to report because we will meet tomorrow evening.
Excellent. Well, we'll look forward to that next time.
month. I'll tell you what happens.
Mrs. Eshelman, Safety and Security.
Just, again, that we met in executive session with our school and safety security coordinator and got that report, and thank him and his whole staff for all their work. And then the addition of the administration authorization for sprinkler system. We want to make sure we're all safe in that route too. So those are the only 2 things.
Okay. Any questions for either of those before we move ahead? Okay. Ms. Small, are you on and ready for PSBA?
Yeah, can you hear me?
Yes. Just fine.
Okay, great. So for PSBA, I just want to echo your report that as a board, we utilize the training tools that are available from our membership with PSBA for our board retreat on June 11th. That session focused on strategic and board goal setting in the framework of best government practices. And I concur that it was a great opportunity for the members of this board to connect. Just as a few legislative updates, PSBA is continuing to advocate for budget priorities outlined in the resolution, which we adopted a similar one. PSBA also sent 5 letters supporting funding in other key areas, such as school safety and student mental health, structured literacy, professional development, solar, student teacher stipends, and a universal school breakfast. And then just to highlight a couple of key bills introduced recently, which are somewhat connected to education and funding. The Education Committee passed House Bill 2633, which would reinstate PlanCon as a way for the state to reinvest in safe, updated learning spaces for students and staff. So that would bring back some of the vehicles for local districts to obtain capital funding for capital projects. PSBA does support that legislation and is looking for board members to contact their representatives to support it as well. Our own representative, Nikki Rivera, introduced a bill, House Bill 2632, and that legislation would replace Pennsylvania's current education tax credit programs. So those are currently the EITC and the OSTC. And we would have a new credit called the EOTC. And that is, the proposed program is intended to increase transparency and accountability by reporting how the funds that any bodies use, how they're using those funds. If those credits are given to an organization, they would then be required to report and then have some sort of audit of how that PSBA is neutral on House Bill 2632. And I think that's pretty much it on the legislative front. And that's all and also, of course, we are still discussing as a board attendance at the upcoming conference for PSBA in October.
Very
That's all I
good.
have.
Great. Are you still available to talk about Lancaster County Academy?
I am, but I have nothing new to report there as we have not had a meeting since Caleb last reported.
All right, excellent. Thank you.
Thank you.
Any questions for Ms. Small? All right, moving on to standing committee reports, education and programs. Mrs. Eshelman.
Okay, at the last Education and Programs meeting, we had an AI update from our team of people who are just always kind of looking at it, using our policy. They gave us information about the AI tools that they reviewed, specifically Magic School usage in the district and their recommendation to go forward with Magic School. I know they also followed up with additional information because there were some board members that had questions, so I thank the team for doing that. And I contacted Dr. Dandridge, and they're still kind of in the process working through that to hopefully get that in place for the fall. And Dr. Dandridge also did the year in review. That's all.
Okay. Next, we have policy, personnel, and legal. Back to Ms. Small.
All right, back to me. So in the policy committee portion of the June 9th meeting, the board discussed some very minor changes to a list of policies related to special education. Those are all on your agenda tonight for first reading approval. Most of those were just language to clarify titles and to update our dates on those to make sure that they have been reviewed within a timely manner. The board also engaged in discussion about policy 109, which is our library materials policy. Mr. Bromersky had brought this policy to the board to gain input on updating and clarifying language and legal definitions. That was in response to some concerns about the implementation and process for purchasing books for our district library collections. Those changes will allow our administration to provide the library professionals with clear guidance for selection criteria. Mr. Bromersky is currently using that feedback from that discussion to update that policy language, and we as a board will review an updated draft at our next policy committee meeting on June 14th with the goal of moving it forward for first reading if we feel like it's ready for that at that time. Any other updates can be found in the minutes for tonight's meeting.
Any
That's
questions
it.
there? All right, thank you, Ms. Small. Moving on to item 9 on the agenda is personnel action items. I need a motion to approve personnel action items 9A, number 1 through 6, as presented.
So moved.
Thank you, Director Linton. Is there a second?
Second.
Thank you, Mr. Best. Any discussion? All right, all those in favor, please say aye.
Aye.
In favor.
Okay. Oh, Kyle is not here. Okay, 7-0 then. And next we have, thank you. Like I didn't realize he wasn't there. Next we have finance action item number 10. We are going to be a motion to approve finance action items 10B through F with the change noted earlier. Is there a motion?
Actually, this is pretty,
through E.
it's B through,
E.
B to E
And then
B to
G
E,
to
and then
I.
we're doing, skipping. Okay, thank you all.
and G and H.
And
Yep.
then G and H.
so
Thank
B,
you for the correction.
through G, B through H, skipping F.
B through E and G and H.
Yep.
Are we all on the same page?
Yeah.
All right, is there a motion?
Motion.
Thank you, Mrs. Eshelman. Is there a second?
Second.
Oh, you're back. Thank you, Mr. Williams. And is there any discussion? All those in favor, please say aye.
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 That's 8-0. Motion carries. And we're going down to E, skipping F, G, H. Now I need a motion to approve the support staff compensation for 2026-2027 as presented.
So moved.
Thank you, Director Linton. Is there a second?
Second.
Thank you, Mrs. Eshelman. Any discussion? All those in favor, please say aye. Aye. Opposed?
Aye.
Aye.
Sorry. And
Abstain.
Mr. Best abstains. So that would be 7, 0, and 1 abstention.
No. Did
They
Patton,
both
They
said
both-
yes.
did.
Yeah.
well, I heard them say after you called for a nay. Were they voting against or for?
No, 4. It's 7. Oh, yeah. I was aye for
I was
in
aye.
favor.
Sorry, I just didn't get in time.
Yeah, me
I
neither.
thought I
In
heard
favor.
you both say aye. Thank you.
Yep.
So I believe, let's just to confirm, we had 7 yes, 1 abstention,
Correct.
none saying no.
Correct.
All right,
Correct.
Thank you all.
Delay.
Oh, and I have to explain why I
Please
abstained.
do, yes.
My wife works for the district and would fall under this, so.
Thank you. Number 11, Buildings and Grounds Action Items. This is the motion to approve the administrative authorization that Mr. Bomerski described earlier, that authorization as presented. Is there a motion?
So moved.
You're on it tonight, Ms.
Yeah,
Nelson.
let's go.
Yeah.
Giddy up.
Is there a second?
Second?
Any discussion? All those in favor, please say aye.
Aye.
Is Mr. Wagner still on?
Sorry. Yep. I was on mute.
Okay.
Go
that-
figure. I'm in favor. Yep. Thank you.
Very
Sorry.
good. And, any no's? No. All those opposed, please say no. No. We're all good. I think, is that an 8-0 is how it turns out. Number 12, policy action items. This is approval of policy action items B through C as presented. That would be the first reading of board policies 113, special education, 113.1, discipline of students with disabilities, 113.2, behavior support plan, 113.3, screening and evaluations for students with disabilities, 113.4, confidentiality of special education students, and 114, gifted education. That is letter B. And letter C is the second reading of board policy 824, maintaining professional adult-student boundaries. Do I hear a motion?
So moved.
I'm going to give that one to Mr. Williams. Is there a second?
Second.
Ms. Small? Any discussion? All those in favor, please say aye.
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 Opposed? That's 8-0. Number 13, other action items. I need a motion to approve to sell, donate, or dispose of the following items as presented: animal cages and cage carts, and miscellaneous library books. Is there a motion?
So moved.
Thank you, Director Linton. A second.
Second.
Thank you, Mr. Wagner. Is there any discussion? All those in favor, please say aye.
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 Opposed? That carries 8-0. Oh, look at that. I need a motion to adjourn this meeting, and we will, do we need to take a break? Should we just start the next one? Okay. We'll take a 10-minute break to wait for our presenters for the next meeting to begin. So at 6:40, we will begin the next meeting. Is there a motion to adjourn?
So moved.
Thank you, Mr. Wagner. Second.
Second.
Thank you, Director Linton. Any discussion? All those in favor, say aye.
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 That's 8-0. And we are adjourned. kind of going real slow here because we're waiting for one more person, but just talk slowly. I will call the meeting to order. This is the Buildings and Grounds meeting. We do not have any requests for residents to address the board this evening. First item is item number 3, electrical construction, the bid approval. For this one, I'm looking for a motion to accept the proposal from McCarty & Sons for electrical construction for the PAC MEP electrical upgrades, package 1A.
So moved.
Thank you, Mr. Williams. Is there a second?
Second.
Thank you, Mr. Best. Any discussion? And I failed to ask, are both Ms. Small and Mr. Wagner still online? Thank you.
Yes.
Yep.
Thank you. Okay, all those in favor, please say aye.
Aye.
Aye. Aye.
That sounds like 8-0. Motion carries. Next, I need a motion to accept the proposal from Farfield Acquisition Company for mechanical construction for the PAC MEP upgrades, package 1A. Is there a motion?
Motion?
Thank you, Mrs. Eshelman. Is there a second?
Second.
Thank you, Mr. Best. Any discussion? Mr. Williams?
Yeah, sorry.
Oh, you were just ready to say, okay. All those in favor say aye.
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 That sounds like it carries 8-0. Finally, a motion for, to accept the proposal from JBM Mechanical for plumbing construction for the PAC MEP upgrades, package 1A. Is there a motion?
So moved.
Thank you, Mr. Williams. Is there a second?
Second?
Thank you, Mrs. Eshelman. Any discussion? All those in favor say aye.
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 Motion carries 8-0. At this point, I will turn the meeting over to Mr. Best for the finance portion of the meeting.
All right. Sorry. Mr. Verdelli, do you want to wait for a bit, see if your colleague makes it? Because if not, I can go and do the contracts first and then come back.
That's a good idea.
All right. All right, so we are going to do contracts. So the following contracts are scheduled for a vote at the regular board meeting next month on July 14th. It's a lot of them. But thankfully, a lot of them are kind of duplications. It's just for each building. Allied Benefit Systems for updated PPO plan and QHDHP plan. Elite Coach for class of 2027 visit or trip. Lancaster Liederkranz for class of 2027 picnic. Marco for on-site shredding at all of our buildings. Mixed Impressions for DJ services. New Holland Coffee Company for Senior Sunrise. Newzella for online services, students, social studies products. Open Security, CrowdStrike, Siemens for fire and security monitoring, as well as security system and access control maintenance. So yeah, that is a lot of reading that we have to do in the next couple weeks.
And that is a typo on 20 and 21, my fault. That should be the 26-27 school year, not 25-26.
Got it. Any questions about any of those? Cool. Moving on to 5A. This is approval of the contracts of the bid approvals that we just approved for the bids that we just approved for Farfield Acquisition, JBM Mechanical, and McCarthy and Sons. Do I have a motion?
Motion.
Mrs. Brady, second.
Second.
Thank you, Mr. Williams. Any discussion? Nope. All in favor?
Aye.
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 All opposed? Nope. All right. And just as a comment, thank you, Mr. Bremirski, for sending correspondence between me and KCBA. It's been great working with them, and even before I was on the board, hearing or seeing the work that they put into this project. So,
Yeah,
appreciate it.
for everyone's awareness, some of the questions that Mr. Best was asking, there was one company that bonded the project 100%, and the other two bonded the company 10%. He was just curious why 10% is the minimum requirement. The other company chose to go 100, which is great. And then he had just some questions of, there's a separate, under the AIA contracts, which keep things all consistent. So as you're looking at future contracts, it should hopefully start to see familiarity with it. There was one document that he was asking to see some of the information, so KCBA provided that document. So I was able to get that to him, so I'll send that out to everybody. And then there were some additional questions that he asked around some other parts of budget, whatnot, so I will be sending that to everybody, but we did want to make sure he got his questions answered early. So look for that either tomorrow or in board news.
All right. And Mr. Verdelli is now good? All right.
Thank you. Good evening. Lee Verdelli from Raymond James, and John Fry from PFM is here with me. It's hard to believe, I was looking back, that it was actually 5 months ago that we were last here at a finance committee meeting. It seems like it was just a couple weeks ago. But we were here in January to talk about the financing plan that we had worked with your administration for the high school project. And then we were here for the Act 34 hearing in February. For those of you that were here for that, we did talk about the plan for financing the project. And basically the way we had left it was, until you were moving forward with the bidding process for the project, there really wasn't anything else for us to do until that time. And that once you were, then we would come back, give you an update on what's happening with interest rates in the municipal bond market, and talk about what the plan would be to implement really the first step of that financing plan that we had reviewed with you. So that's what the plan is tonight. John's going to give you a little refresher on some of those things that we talked about, terms like your borrowing capacity and some of the other things that we've been mindful of as we've given you the guidance when approaching such a large project in the Act 1 era. So we'll do that and then talk a little bit about the next steps in that plan and give you a market update.
Great, thanks Lou, and nice to see everybody again tonight. Again, this will just be a refresher from January, but I think everything's moving forward nicely. So just a couple of the current situation bullet points. Again, one of the best things about the district as it enters in this financing plan is it's maintained a very good credit rating of a AA2 for Moody's. Every time you offer a bond issue, you need to reaffirm that rating and go through that same process for each single bond issue. And Mrs. Hall and Mr. Bremirski do a great job every time, really nailing home the financials to Moody's and explaining the situation of the district. The current debt of the district, as it stands today, is $91.8 million of principal outstanding, with a remaining borrowing capacity of about $245 million. And if you recall, the borrowing capacity changes each year as you pay down debt on your existing bonds, and as your revenues increase on your budget. It's a formulaic situation where we provide what the borrowing capacity is. But as of now, it's about $245 million. Just a reminder, with the Act 1 index that we've always talked about, the district has done a great job in planning way ahead for this financing and putting millage in place for the preparation of issuing bonds. So you're well underway, but that continues to be an important step all along this process to make sure the debt service is paid for well in advance and with the limitations of Act 1. The borrowing rules, we always are following the IRS tax exempt rules as far as when you're allowed to borrow. The district has always done a nice job of looking ahead at its capital plans and borrowing accordingly. You have to have reasonable expectation at the issuance of the bonds that you'd spend the money in 85% of the money in 3 years. So that's the kind of time horizon that we're always looking at, is within that 3-year period. And again, bond issues are for capital projects and not working capital and just basic expenses of the district. And we'll go through the timeline in a little bit, but the district has borrowed several times over the last couple of years, so we have this very well streamlined and always get to the finish line when we need to. Page 3, just a recap of the index that you're well aware of as far as the historical index for Pennsylvania school districts, showing the base index for next year of 3.5%, and the economics show that it's not forecasted to rise in the next several years. So again, those are the limitations that the district and all of Pennsylvania are limited to as far as raising revenue. Again, on page 4 is the calculation that I talked about as far as the borrowing capacity. Again, we're always looking, the formula that's provided in the Pennsylvania borrowing laws is you look back at the last 3 years of revenues and average those together, multiply it by 225%. That kind of gives you what your borrowing base is, and then you subtract out the current existing debt. So that's why it's a formulaic process that we go through. And then on the next page.
John, sorry, real quick.
Yes, sir.
Given that we probably won't do anything until after July 1, just not looking to go to the index or where we're top of the borrowing, but would that get recalculated prior to any Moody's call? Or is that going to be standard? Because after July 1, we'll be in the 26-27 fiscal year.
Let me look at yeah, we would probably be able to use the 25-26.
Okay.
And, because as of June, you have to use what it lasts, but once we get into this in July, August, it would likely we be using another year's increased revenue. And that would be laid out in the preliminary official statement. The next 2 pages are the outline of all the district's existing debt, with page 5 being the debt service payments, which is just principal and interest to all the bondholders. But maybe we just look at page 6, because this is after state reimbursement. The state reimburses the district on some of its outstanding debt for, prior to the moratorium and PlanCon. So these are your net payments to all the different bondholders of the different series of bonds, and they add up to approximately $9.3 million on the far right column. That far right column is what we eventually, our firms structure the new debt for the new project around this, and we'll go over that on the next page. But that's a very important column. You see that we have issued in, about in 2025, we did start to wrap around your existing debt, and we'll continue to do so. And both of our firms are always mindful of whatever existing refinancing opportunities there are. As of now, given the current interest rates on your existing bonds and the call dates or refinancing opportunities on those bonds, there's really not much right now, but as we look to 2028, there may be some opportunities if interest rates remain low. That would be the next opportunity for us to refinance some of your bonds. But it's something that we're very mindful of and are always looking at to try to lower interest costs to the district. Now with that, I'll turn it over to Lou to go through the financing plan.
Thank you, John. So we will start on page 7. And this is the financing plan that we've, over really, I guess, probably the last 2 years, we've modified this and moved it around. And obviously, as interest rates change, we've adjusted it. But the important point to take off of what John was just pointing out is the district's debt in column 2, when we look at how it was structured, and this is prior to the new issue that we did last summer. But it's important to just look. We have been structuring the district's existing debt to pay off as quickly as possible. We knew there was other projects coming down the line. So you can see how that debt is structured. And then in column 3, as a refresher, in green, that was the $15 million that you approved last year. And as you go down column 3, you can see the payments are smaller in the first 10 or 12 years, and then they jump up quite a bit in 2038. And that's what John is describing as a wraparound of your existing debt. We're trying to minimize the budget impact of these new borrowings, so putting that debt out there where the existing debt drops off, we can minimize the upfront budget impact. So really, all of the borrowings to fund the project would be structured in a similar manner where we're just continuing to wrap around that drop off in your existing debt. So the plan is really columns 3, 4, 5, and 6. You might recall that when we were here in January, we said this is nothing more than kind of just a blueprint. It probably will end up slightly different by the time we get out to 2028 when it's time to do the final borrowing. But what we try to solve for is a gradual impact to the budget of debt service ramping up over the course of the next 5 or 6 years. And so by staggering the borrowings over really this 4-year period, we're able to stretch out that impact that we don't have everything hitting one budget all at once or just in 2 years. So the goal of that is basically ends up in column 7. When you look down through column 7, and you can see how when we add it all up, your existing debt plus the proposed borrowings that are yet to be done in columns 4, 5, and 6, you can see how the debt service ramps up, and eventually by the time we get out to 2031, you have to have your debt service budget up to that number just shy of $20 million per year. So that's where we're headed. Column 4, the way we broke that down was approximately $75 million would be the next borrowing, and then a year from now in 2027, you would do another $75 million, and then the final issue in 2028 would be about $60 million to fully fund the project. And again, we were looking at the estimated draw schedule for how your construction, obviously this is a big project and it's going to take several years, so we're also thinking about that as we layer in the money coming in so that it's available to pay your construction bills as the construction of the project is progressing. On this page, it's also important, John mentioned at the beginning, Act 1 planning, and that you've been very diligent in column 9, which is basically stepping up your millage that you have in place for debt service. And I know that in the budget that you just adopted, you had the 1.62% increase following this schedule. And as you go down through there, you can see there would still be 4 remaining increases of about the same amount to fully fund all of the debt service for the project over the next 4 additional years. So that's the plan in terms of the different borrowings. Obviously, we'll shift now and be more focused on just this next one and the reasoning for getting prepared to do that. And part of that is the next page, which is our interest rate chart that we always show you. I'm sure everybody sees on the news lots of talk about the price of oil, what's been happening since February, the Middle East situation. Oil went way up, interest rates kind of moved up with it. As things were getting a little bit better in the Middle East, oil has come down, interest rates have come down, and the municipal bond market has been kind of isolated a little bit from what's happening in the U.S. Treasury bond market. Those interest rates were much more volatile over the last 3 months, moving around up and down. Our market, fortunately, didn't move too much at all, didn't go up as much, and it kind of stayed more stable. So we have a lot of clients that are in your situation, projects starting this fall, this summer, that are looking at this chart and saying interest rates are pretty attractive, we should move forward. I can give you a live example. We price bonds today for Derry Township School District, where they're building a brand new elementary school. We have that borrowing broken up into a $50 million piece and a $40 million piece. the interest rate today for Dairy Township School District, it's a 25-year financing, so pretty indicative of the financings that you will do. It was just under 4%. So to be able to lock in 25-year money below 4%, still pretty attractive. The other thing that is important to note, obviously there's been a lot of talk about inflation. Readings have been running a little bit hot over the last couple of months, and we just had the new Fed chair oversee the first meeting of his tenure, and the takeaway last week was that basically the Fed might be more into a interest rate increasing bias than where we really thought we were the last 6 months. Some of the indications of their projections of what they might do with Fed funds rates was leaning more towards increasing interest rates later this year. So as we think about that impact and we think about where rates are today, the recommendation of the financing team is we probably should keep proceeding, be in a position to go, that once you receive your bids, if they're satisfactory and if the board's moving forward with the project, we'd like to have you in a position to get into the market and lock in this first piece as soon as possible. So with that in mind, if you turn to the final page 9, and this is the paper version that I passed around, we just updated today, speaking with Mrs. Hall about what your plans are for targeting the construction award. So this is a little bit different than the one that we had circulated earlier. What we discussed, again, was having you in a position to be ready to lock in rates basically as soon as the board has approved the construction bids. So if we look where we were, as I mentioned, January 27th, we were here at a finance committee meeting talking about this. We're back now on June the 23rd, and what we'd like to do is just basically get a nod of the head that the financing team could begin the work that we do, getting documents together, starting the credit rating process, start drawing up the parameters, resolution, so that as you get your bids back, which I understand would be targeted towards the end of July, and potentially approve them at the July 28th meeting. If that happens then, we will know your number. If we need to adjust the financing plan at all, hopefully down a little bit, because we had one of those just happened recently. It gives us some time between when you would approve your construction bids at the end of July, and we saw that you have a board meeting on August the 11th. At the 11th, we could be here with bond counsel to adopt the borrowing parameters resolution that would authorize the debt for the project, and then be in a position, if the market looks good, the very next day potentially locking in interest rates on August the 12th, and then we would close in mid-September. That's when the district would receive the funds. I would also just mention one of the takeaways from what the Fed said and did is another opportunity for the district. Many of you will recall the district took our advice and the opportunities to generate interest earnings and positive arbitrage a couple years ago when short-term interest rates were so high. That opportunity is kind of coming back, because with the Fed saying that they're potentially raising rates, short-term rates, we've seen the yield on the 2-year U.S. Treasury pop up to about a 4.2%. So the money that you borrow until we spend it on the project, we'll be able to invest at probably close to 4%. So it also becomes another argument for getting the money sooner to get it invested, generate more interest earnings, and depending on how much interest earnings we generate, we can obviously downsize some of those future issues. So it's kind of unique that right now the long-term rates have stayed low, which is good for you on the borrowing side because you're borrowing 25-year money. But we've seen this rise in short-term rates, which kind of creates a nice opportunity to also generate interest earnings while you're sitting on the funds before they're used for paying the project costs. So that's the latest on the schedule. Obviously, we would be watching the market. If we got to August and something crazy was going on, we can just be on hold, but ready. Obviously, you have enough money to start the project, so there's no urgency. But on the other hand, if rates are still attractive, we wanted to have you in a position that you could lock in that first piece, which is obviously a substantial portion of the project financing. So we'll stop there, entertain any questions that you have.
Just to clarify, one clarification, due to some of the delays with the DEP and whatnot, the tentative or the scheduled date for bid openings for the project is July 29th,
Okay.
which means then that they will be presented to the board on August 11th.
Okay.
And then subsequently potential approval at August 25th. But I'm wondering, with that timeline, can we run parallel with some of these pieces on the potentially parameters resolution, kind of doing that simultaneously as things are being presented, and as long as everything goes well from the bid standpoint, to kind of stay on track with your schedule? Does that work?
All of the behind-the-scenes work we can be doing, absolutely. Probably we would just want to move the parameters action of the board actually taking that action down to that August 25th.
Okay.
You could do it all together. That way, if there are any changes, once you review the bids on the 11th, we can adjust that amount that would go into the parameters. We'll have 2 weeks to do that.
Okay.
And you could just adopt the parameters the same night that you're awarding the bids. So we would just push the pricing of the bonds back 2 weeks.
Do you have to have the bids to move forward?
You don't. That's a discussion topic that oftentimes when we're asked, well, what's going on with interest rates, that we say, sure, you could move forward. You like where interest rates are. You're very confident that your numbers are going to be where they should be and that the board's going to accept them. In the larger projects, though, and especially in the recent bidding environment that we've had where some of the numbers have come in higher, some have come in lower, there are some boards that are more comfortable before actually doing the borrowing that you know your number, you know you're moving forward, but there's no rules on that.
That was where I was going. I would suggest that maybe we consider moving forward with all of this as planned without the bid. I think it's pretty safe to say that because we're only borrowing a small portion or a third or less of that amount, that unless we plan to abandon this project for some reason, which I don't think this board's going to do, we're going to need those dollars. So why not get them locked in at the lower rate? Why not benefit from the interest of that during that period of time? We will be using that within the 3 years because the project is off the ground. So I'm not concerned about that getting used in a timely manner. I would suggest we don't wait for the bids and risk that the feds would raise the rates in a few days or a month prior to us finalizing this. I don't see the risk in moving ahead with the borrowing. That's where I'm at. If we were borrowing all of it and we were waiting for the final amount, that would feel a lot different to me.
Right.
I would not be interested in doing this in advance of the bid, but that's not the case.
Right. That's the most important part that we would definitely agree with you on. If, pick a number. If it was a $30 million project, you say, let's borrow all 30, but there was the chance that the project cost came in at 40 and everybody said time out, we wouldn't want you to be in that position of already having borrowed the money. But the most important part there that you emphasized is if you're borrowing some portion of what you eventually expect the cost to be, you shouldn't be in a bad position. And again, there's no legal requirement to have the bids in hand.
Yeah, I guess.
And with the timeline laid out, it sounds like the bids will be in on July 29th. So
That's when they'll be opened.
right, so you'll at least start to see
Correct.
levels
Yep.
of uncomfortableness or.
Yeah.
So, I mean, to his point, essentially, we would know before we approve the parameters resolution that, we're actually within the range that we've been expecting, not suddenly like, oh, it's a $300 million project. I think that's probably the only time, to Mr. Wohlgemuth's point, that we would say, whoa, let's reconsider this.
Good point.
Any other questions?
I do have one, and this is just a detailed question on slide 7. I'm just trying to make sense of numbers here. I assume we're just rounding for prettiness, but on the column 4, the blue column where it says 72,865, and then down at the bottom it's 75. And are we just rounding for pretty numbers?
No.
No.
It's a great question.
It's a very good question. When we sell the bonds, right now, there's a lot of
The fee.
demand for premium.
Okay,
So basically, you only need to sell 72 million of bonds, and investors are going to pay you more than 100 cents on the dollar.
okay,
And so we get $2 or $3 million of premium. So at the end of the day, you will actually have 75 million in the construction fund deposit.
okay,
But the par amount of bonds that you've sold is only 72.
all right.
So we have a footnote down at the bottom in blue where it says $75 million project fund. That's how much money we are producing as
Okay.
a result of that financing that would go and be available for construction.
Thank you.
And that's a really good question, because it's kind of getting in the bond math and in the weeds. So that's a great question. We get that a lot.
And then my other question is, where we're starting at the top left of that chart, June 2025, the debt service at 8,457. And then I'm coming over here, and as it goes down, it's still staying in that 8.5 range. But up here in June of 27, the debt service is 9,303,000. So I was just trying to figure out what the differences are there.
Yeah.
So we've added in column 3, starting with what you had. You've already borrowed and completed the borrowing in column 3. So we're adding columns 2 and 3 to come up with the total in column 7. Is that what your question was?
You're looking at
I'm looking at this, the current debt
Is it
service.
column 22?
Yeah,
Yeah, I had the same question.
Yep. So
Essentially,
column
it's-
22 on page 6, the total debt service of June 30th, 2027,
Yeah.
9,303,404, that number, how does that it doesn't correlate
To
over when you
anything
carry it over?
Right, it's
It's-
because one table already includes the 2025 bond issue, and the other table does not. Like column 2 on the financing plan does not include the 2025 bond issue.
but column 22 does.
Right,
So 2 and 3 combined equal to 22.
that's right, that's exactly right.
Any other questions?
And we're also
I'll try.
using after-state reimbursement for column 2.
gotcha.
Yeah, so that's why it's column 22, not 11, because it's the after, not before.
Right.
I'm going to jump in here. So you're mentioning that possibly we could do the same, invest the money that we borrow and get extra interest. But if I remember correctly from previous presentations, you've said that the cap on that is if you borrow 15 million. How does that work with us borrowing 72 million?
Right. Good, very good question and good memory on the 15 million. So the IRS gives you, the 15 million is kind of the free pass for what they deem small issuers. They view if you're only borrowing $15 million per year, that's a small issuer. And they say during that time that you have the money, if you can invest it above the rate that you borrow at, any interest you earn, you can keep. So when you go above that amount, the difference is they give you some exceptions to the rule of your ability to keep interest earnings. And one of those is spend down, how quickly you spend the money.
Got it.
So if you spend the money, which we know from the draw schedules and the timelines, so there's one spend down that if you get it all spent by benchmarks over 18 months, any interest that you've generated, you can keep. And another spend down is you spend it all over 24 months, you can keep the interest that you've generated.
So at some point, as long as we draw down enough, we don't have to pay anyone back or pay the government. But if we maybe have a delay or a little bit slower with it, we may have to pay some of it back, but not all of it.
Right, it's only that positive arbitrage, the increment above the arbitrage yield in the bonds. But you'll be able, if you borrowed at 4 and earned 3.8, you'd be able to keep the 3.8. It's just the positive arbitrage that we're talking about as far as being able to keep if you meet the certain benchmarks.
Yeah, so, and then if you don't meet the benchmarks, you forfeit all of the benefit or just a portion of it?
Just what's above your borrowing rate, so let's.
Well, yeah, that's the benefit that I'm talking about. So regardless, 4.2 minus 3.8, that's the benefit. And it's either we get to keep it all or we lose it all. It depends on whether or not we meet those benchmarks, correct?
Right,
Yeah.
but the other important part is if we think back 5 years ago when short-term interest rates were 0, it made no sense to borrow in advance of a project because you couldn't even earn 2 or 3%. In this current illustration, if we can earn 380 on the money, which maybe is a better estimate, you can keep all of that interest earnings. And that literally might be a couple $1 million based on the amounts that we're talking about.
Yep, yeah, so
that's
essentially,
money that you otherwise would not be generating, you know, if we were in a 0% interest rate environment like we were in 2020 and 2021, there's no interest earnings that help reduce the amount that you need to borrow.
yeah, I guess I was thinking of it as, okay, we're paying 3.8% interest and we're getting 3.8, so it's a net zero, but it really isn't. We get those several $1 million because it's not like we're adjusting our payment to compensate for that added increase.
Right.
Cool.
Yeah, yeah.
There's technically no downside.
Oh, yeah.
And again, we never thought interest rates would stay this, on the short end, this high, this long. And again, as Lou said, even on that chart we showed you, those are 10-year rates, and even 10-year rates have moved up more than what you're borrowing at, or more like 20-year rates. And that's why the numbers you saw in today's presentation are really similar to what they look like in January, is because the longer bonds, like the 20, 25-year bonds, have actually stayed the same or slightly decreased, while the short end of the curve from 2 to 10 have increased more. So it's pretty dynamic, and even this week, there's a lot of inflation data coming out later this week that'll help to continue to drive this, to see where the path might go. But overall, it's, again, because you're doing long bonds, it's still very attractive.
I guess the only other question that I had was, as Mr. Bremerski mentioned, there have been some slight delays. I guess first off, Mr. Bremerski, has that changed the overall schedule at all?
From a project standpoint, no. Where it starts potentially is the initial drawdown of some of the funds, because we haven't started the actual construction yet.
Yeah, so maybe.
And so depending on when that starts will depend on when we actually have to start paying at a certain level.
Yeah.
So as long as we can start this fall, I think we're good. If there would be a delay, that would push that. Like if we were to, what we've heard is they don't want to start right away in the winter out of the gate because they're going to have challenges there and costs are going to be much higher. So then we'd have to wait. If we have to wait, in a sense, a full year, that would be definitely a challenge on this bend.
So I guess something else we may want to consider before passing the bond parameters is where we are on that schedule. Are we still able to do it? And does that change how much we want to borrow? So maybe instead of 75 this first year, we do 50, 60, whatever, and then do a little bit more next year. I don't know. Something to consider. Any thoughts on that? Or does it still make sense to just do the 75 now, especially if interest rates are projected to go up?
Yeah, part of it is how we're trying to kind of gradually bring that debt service into your budget. So obviously, the more you borrow, the more impact we have sooner. It ends up being an interest rate call at the end of the day, that if rates continue to look good and we want to do that amount or do more, I think as of right now, if rates were exactly the same, we would recommend just staying on this plan. Really, just because it's such a driver of the budget impact, trying to break it up in the way we have it spread.
And again, you
Makes
have
sense.
3 years, that 3-year time span to use that portion of it. So even if we were delayed by a year, we'd still be in the.
Yeah, I mean,
timeframe.
if we were delayed a year, then that makes it harder to hit those benchmarks. But then, to your point, we still get to keep that 3.8 or whatever we borrow at. So, all right. Any other questions from anyone? Mrs. Small or Mr. Wagner? Oh, sorry, Mr. Wohlgemuth.
I just have a question for Mrs. Hall. And my question is, we've put some money aside for the project. Has there been talk about or a plan when we look at the 19 million, the ramp up 18, 19 million payment for some of the borrowing? How have we looked at structuring that we would draw some from some of those funds we've set aside to help to limit that amount year over year? And has that been discussed in the financial side of things? As I realize that's not part of this, that's not your role, but have we discussed how much we could put towards that would lessen that bond payment during those 6 years where it's going to be a little more pain? And that was the idea of setting that aside. So I'm curious to know if we talked about that, and is there a number we could apply to that every year?
I don't know if I'm totally following, but we're keeping the cash that we have
Yes.
set aside for the end,
Yes.
right? So we can continue to earn interest on it. We have to pay down these bonds. We have to use the bonds. So we're structuring it that we liquidate those first. And then there will be money. It really is going to depend on the other capital projects as well that come online.
Because I think part of the idea, and I think you can do this a number of different ways, would be to do a slow draw from there to minimize the impact of that payment increase that hits, I think, year 4 based on this, or year 5. Or I guess if you're going to keep it invested and then pay off at the end, there's a number of ways to do it. I just wanted to make sure we still had a plan to utilize that to minimize the impact financially to the taxpayer and to the district.
It's the money it's the money that you are putting aside for the debt.
That is being built in. So
Yep.
I don't know if you're talking about the years where we end up with a deficit. Like, that's where that is.
No, I think he's talking how we're going to go from 9 to then 18 within
Well,
3
that's
years.
what the millage build it
Yep.
is. So the money's going into capital while we're not utilizing it for debt service. This year, we did have some more debt service come on, so some of it went to debt, some went to capital, but we're retaining that percentage that's adding year over year for these debt service payments.
I
That's
guess
the
my-
whole point of putting,
yeah,
I mean,
That's
would
column
you be
11, right?
changing these percentages?
You're talking the same things.
I think we are.
we
So
are.
the money that has been already built in is available to help decrease, like right out of the gate, going from
Yes.
9 to 19 million. They're going to be able to draw down on some of that to help offset that significant increase.
So, yes, so that money that we're building in will be for debt service. It will not be transferred to
correct.
Okay.
capital project.
That's, I think we are talking the
Yes,
same
sorry.
language. I just want to make sure we were
Yes.
still on track with that discussion we had
Yes.
maybe 3 or 4 years ago when we started
Yeah.
to plan for this.
Oh, no, that's exactly what we're doing with it.
Mrs. Hall has been diligent on that. Those dollars are earmarked solely for
Yes,
this
they're
project.
That's column 11, right?
That is-
Right, so like we're building up that little bit of a surplus, and then we're going to
Yes.
spend it down.
So the years that we weren't making the higher debt service payments, we put it in
Yep.
capital. And now, as the service comes on, the portion that we haven't used yet, because we haven't taken on all the borrowing, goes to capital. But that changes as debt service comes on, all goes to debt service.
Cool.
Yeah, and I did see that column, but I also know there's a bank of those dollars from the years that aren't on this.
Right.
That's what I was referencing.
Yeah, sorry, I was not
Yes.
following your question.
All right, Mrs. Small or Mr. Wagner, any questions?
I have no questions.
Nope, nor do I. I'm good to go. Thank you.
All right, questions from anyone else?
So I guess to their point, do they have authorization to proceed with continuing forward with all the behind-the-scenes work?
I guess, is there anyone who objects to them proceeding? Sounds like you have your verbal.
Okay, thank you. So on the topic of potentially entertaining the parameters prior to the bid award, do we want to do that? I'm not sure if I heard that clarification.
You probably didn't, but I'm recommending that you proceed with that timeline and not delay it simply because of the potential for the interest rate increase and potentially, losing some ground there if we wait for the bid. I think the risk is nil to none the benefit is much greater.
We would be approving the bids on the 11th.
They'll be presented to you on the 11th.
Got it.
We will know on the 29th how we're falling, and then we'll be sharing that information, but publicly presenting it on the 11th to be able to start that process. But after the bids are open, there is a small window of time in which contractors can back out. And then the Fidavia team and KCBA will be working with the contractors to verify everything, make sure all the I's dotted, T's crossed in that process, which is why we needed to get to the next board meeting to present.
So presented in the 11th, approved on the 25th.
Correct.
Got it. So then,
You theoretically could proceed with the parameters resolution because that would happen after the bids are presented to you.
yep,
And so you would know if you wanted to do that or not. And if they come in, which hopefully they don't, but if they come in higher on the 29th, we're going to be able to follow up and say this isn't going to work.
yeah. I guess I agree with Mr. Wolgemuth. It sounds like might as well move forward, and if anything, we kick it 2 weeks, but otherwise, let's just move forward. Any objections?
No, none from me. It makes sense to me as well. The benefits outweigh the risk for sure. To Mr. Wogelman's point, so I'm good.
There really is no risk because we're going to see those bids come in. Other than the final acceptance of them, we're even going to have a glimpse of them ahead of time before we make that decision.
Yeah.
After.
Yeah. Agreed.
Think about the parameters that we've used. Think about when we do that for a refinancing opportunity. You oftentimes approve that parameters months before we get to the transaction. So just because we're taking the parameters action doesn't necessarily mean that we're going to be in the market selling bonds the next day. It really is just taking care of the paper authorizations. It's something that you can kind of check the box on and take care of it. Of course, we'll be in touch with the administration before we would move forward with the borrowing. So doing the parameters at that point in time, and again, you know, we always have to inflate those for state law purposes. So it will be some bigger number anyway than what the project cost estimates are. So you're just putting that in place, it's in paper, and then once we actually issue bonds, that gets corrected after the fact.
Mrs. Brady?
Yeah, I just want to clarify what I think I just heard you say. So even if on the 11th, we looked at the bid, approved the bids, and had the parameters resolution, you wouldn't necessarily go right to bond sale on the 12th.
Right,
Okay,
right.
so you could be watching the interest rates at that point and maybe put
Yeah,
that.
we certainly would not proceed if there was any questions and you were alternates or changing something on the project.
It's just giving you the permission.
The
Okay.
approval's there, but we would still be tweaking amount, waiting for guidance from the administration on what amount we're going to do, obviously giving feedback on what's happening in the market, and then once everybody was comfortable, then we would proceed with actually selling bonds.
Okay. And I realize this is the board's decision, but I just would like to hear Mrs. Hall's opinion on that move.
On moving forward, I think
Yeah.
it's a good idea to
Okay.
keep this moving.
Okay,
I would
thank you.
agree.
We've had enough delays already. Let's keep this wagon rolling.
Wanted to get the sense of risk from,
Yeah. Any other questions or comments? All right, thank you both very much.
Okay,
I
thank you.
always appreciate when you guys come and
Yeah.
give these. They're very informative and very well detailed. Thank
Good.
you.
You're welcome. So the next time you would see us would be August 11th. The parameters would be on your agenda. Your bond counsel will be here. And we'll obviously know what else is happening on the project prior to that.
Yep.
Okay,
Thank you.
thanks.
Thank you.
Thank you.
All right. I believe that is it. Schedule of upcoming meetings. Have a couple meetings in July and a couple in August. Do I have a motion to adjourn to
Are we doing exec?
informational session? Exec session? What is it? Is it
Yes.
informational?
Informational session, yeah.
Okay.
For continuation of the board retreat.
So moved.
And if Mr. Wagner and Ms. Small, if you need a Zoom link, please let me know.
Thank you.
All right. Motion.
Yeah.
Second. Thank you, Mrs. Esserman and Director Linton. All approved?
That was me first, Carissa. You're welcome.
Aye.
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 Any opposed? We are adjourned. Thank you.